What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In this video, we're going to talk about the madness in the market. We had SPY give us a big gap down and a red day followed by some gap ups. So we're going to take a look at that. Then we're going to look at the Qs and IWM. And then we're going to look at some companies: Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon, like always. If you're interested in joining the Swing Trade newsletter, there's a link in the description. It's going to be the first one. You can sign up there for 5 to 10 swing trade ideas a week. We're also on Instagram and on Discord, where you can chat with me and other traders in real time. So check that out also. All right, jumping right into it, we're going to start off on our SPY weekly chart as always. And you can see we have this really odd looking candle. That's due to all the gap up, gap down action that we did have this week. But you can see we're right back up at all-time highs. Big lower tail right off of our previous resistance, which, you know, if we do get a bounce here, this will confirm that it is support. So this will be a little move up, a pull back into it. And now if we confirm this level as support, which it looks like we did based on this tail, you know, we can move onward and upward from here. So let's do the daily. All right, so why does the weekly look like that? Well, we had this big red day, then a massive gap down where the hammer confirmed this as support, and now we have been moving back in the upwards direction with a couple of gaps in here. So keep in mind that we do have some gaps below us, which should be repaired. That's also, you know, we do have another gap here where the cursor is now, and then the glaring gap in the chart is still way back down here. Gap fill happens all the way at 294 just about. So keep those in mind. Not all gaps fill, but they are likely to. So that's something, you know, just to have on your radar. We are at the all-time high, so if we see a breakout over it, we're playing whole and half dollars into blue sky territory. Any sort of move to the downside, and I would expect this first initial gap to fill, and that level to fill to is right here around 312.20. I would just play 312.25 or 312 the whole dollar based on what you're comfortable with and how well the market's moving that day as a support to the downside. If that breaks, then this one could act as our next support, which would be another gap fill here, which would fill this gap at 309.65, the high of this hammer candle. And then we would be all the way back down to our rising support trend line now that we're above it. We really don't want to get back down there. This is sort of the new higher low, if you will, from some of these in here. So we want to see this low hold at the least, and that's at 307.05, and we want to continue to make new highs to see the bullish trend remain intact. Qs, very similar. You can see it just had an even more aggressive and kind of crazy day here on Tuesday. Big gap down, and then we just sold off hard all day, and then came back to close green. So kind of wild ride there. Got into the 50 SMA on the daily. If you were a buyer down here as support, as we were coming into that, great play there. You probably made out nicely. But as the chart lays right now, you can see we're not quite as high as we are on SPY. So we're not quite at that all-time high level at 206.05. Instead, we're just below it. So I think there's a little bit of room to move to the upside here to, become even with SPY essentially, and then possibly see that breakout into blue sky territories where it's whole and half dollars. However, if SPY gets a rejection where it is now from the all-time high, then I wouldn't expect the Qs to make it all the way to 206.05. We might just get that rejection early, in which case we're playing this dotted line as support. You can see all these times it's acted as support in the past. If it breaks, then this hammer, kind of weird candle, is going to be key. We're going to obviously target this level here first and then the 50 SMA, but then really it's the end and bottom of this candle instead of this level here at 195.25. So that would now become 194 just about. So keep that level in mind as well. IWM is continuing to look really nice. You can see we got the bull flag breakout, and then we pulled back. Now we're retesting that resistance as support, which has been confirmed with this green candle. Now you can see we do have an inverted hammer right up here around resistance, so I wouldn't be surprised to see a pullback off of this level, maybe a gap fill to this level here, which is right around 161.65 based on this, but the trend is certainly healthy and up on IWM. Maybe if we draw on a trend line, we can visualize that just a little bit better. If we connect some of our lows here, you can see touch, sort of got into it there, touch here. It's really a nice uptrend that's starting to form here on IWM, and we're really starting to get out of this thick resistance zone, in which case we have some targets above. First one's at right around 170. That comes from previous highs way back here. So that's one thing to keep in mind. On the downside, supports are mapped out for us. So if we go back down, we're looking at 161. 159.75, and then our support trend line should hold us up and keep this uptrend. If you're enjoying the analysis so far, be sure to leave the video a thumbs up. I'd love to hear from you guys if you find these videos helpful. The point of them is to give you an edge going into the trading week ahead. Getting into Apple, you can see that we did break out over our highs here at 267.82. Now we're at a nice round number here. 271 is the new all-time high on Apple. So we'll mark that off as a reminder if we get back over it. Blue sky territories, so that's whole and half dollars, anything over 271. On the downside, we are looking to see this as our last, sort of ditch effort support at 255.64. Anything lower than that and the uptrend starts to get a little bit fuzzier. Of course, we could get back down to our dotted trend line here, but I'd like to see us consolidate over time instead of pulling back. Any other supports above that are going to be at 260.41, and then there's a tiny gap here to fill in between our Friday candle and our Thursday candle. The gap fills just around 265.50, I would call it. Netflix is consolidating and essentially just going sideways after it sort of took a hit with the market. You can see these 4 days essentially are just sideways. We're really going to be wanting to see if we break out over the highs of these candles. I would say anything over 308. And then anything under our level here at 302 just about, or you could even call it this support here at 300 based on the tail of this candle. So whether or not we break out over these 4 or under these 4 is going to dictate what direction Netflix goes early on next week. If it's to the upside, we're going to target our highs up here at 316. If it's to the downside, we're going to target the 50 SMA if we break down below our 295.64 support based on our previous resistance here. Tesla, another one that didn't really follow the market, but is just sort of consolidating sideways in this little channel here. Again, if we break out over the highs of the channel, which is 340.80, if we break out over that, we're looking to fill the gap up here to 352.36, essentially the low of this candle here, maybe just before it based on some of this prior resistance. If we break down below, which you can see all these touch points, so it's sort of like a reverse pressure cooker, 1, 2, 3, 4, now 5 touches to this support trend line. If that breaks, then we are looking to get the flush all the way down to 310.23. 50 SMA might start to catch up with the price at that time. BABA has been moving crazy recently. You can see it's been on a lot of people's radars based on how much volume has really come in since the breakout of this longer term symmetrical triangle. I think that the trend is still in the upwards direction. Obviously, as we did just make a new high, we want to see that continue. So new highs and higher lows continuing to form as we move above here. Our next real form of resistance is going to come in at 211.73, and that's a level from way back. If we scroll, you can see that's sort of our highs from up here. So we do want to target that as the ultimate move if we get continuation here, new highs, new higher lows. If we do see any sort of pullback, we want to see this level at 195 act as support. It didn't really do that here. You can see we dipped down below it, but that's sort of due to the big gap down in the market. So I would maintain that 195 is an important level. Anything lower, and we're looking at this level here at 188.10, that's really, we don't want to see the market get back down there, but if it does, that would be okay. Ultimately, we don't want to get back inside of this triangle range. That would mean that we could potentially see a fake out here and then a move to the downside continue. Facebook, like we called it, we saw a move and a bounce right off of our level here, lower resistant support trend line, and a support level here at 195. So congrats if you got in on that move, got the pullback, and now we're just continuing to move in the upwards direction inside of our little triangle that's been forming here. It is a rising wedge, which is a bearish pattern. However, I think at this point, I would say, it's more than likely that if the market continues in the upwards direction, we just see continuation into our highs here and then maybe get out of this triangle pattern. This is ultimately just the retest of our support, which comes from touch and a couple previous ones. So keep that in mind if we get above it. Anything to the downside, and we have our supports mapped out for us. 195 is the key one right now. Anything lower than that would be a lower low, which we don't want to see. And then if that does happen, then we're looking to target 191.20, which the 50 SMA will start to catch up with. Anything lower than that, you can see we sort of have some levels in this area. We'll just call it right around 179. That's really not where we want to see the chart head, but hey, we're just going to play the action if it does. So I'm going to start a little bit zoomed out on a video just so you can see how similar it is to BABA. Essentially, we have a symmetrical triangle. We get the breakout retest of the resistance trend line, and now we move in the upwards direction. So that's what we're kind of wanting to see on BABA happen. We don't want to see the breakdown, like we said, back into it. We want to make sure it does maintain this as support and continue in the upwards direction. You can see that we're just sort of chopping around with the market. The market had a sort of a wild week, so did NVIDIA. We had the big gap down, gap up a little bit. Now we're just sort of chopping around sideways. We are consolidating right below our previous resistance level, so it'll be interesting to see if this was a fake breakout over this level, or we're going to continue in the upwards direction, in which case we do want to see a higher high be formed, which is anything over the high of this candle, which is at 221.41. We want to maintain this as our support level now. Let's move that level up a bit. So this level would be the new support. You can see it touched here and it touched here, and now we're moving in the upwards direction. So that level is at $200. Even the 50 SMA is coinciding with that level. So any further pullback into it should be viable, and then we could get a bounce and move in the upwards direction here. This level seems to me to hold less import now that the gap has filled below it. And this level is solid here. So keep everything we have on the chart in mind. Last ditch we want to see is 188.40. Anything lower than that in the uptrend and breakout is sort of less powerful in my opinion, but we do have the 200 SMA to be a savior if it starts to coincide with that level. Microsoft is still doing a good job of maintaining its uptrend. You can see that it did get into the support trend line, but that was the day that the market had a big gap down and moved to the downside first early in the morning. So good to see that it maintained, staying above, just barely dipped below. Good to see. Anything over 152 will put us back in blue sky territories, in which case we're playing whole and half dollar resistances. Any sort of pullbacks, we do want to see this dotted line hold up, but if it does give, then we do have our next support. Well, we could call this a new one. We could call 146.59 based on the low of this candle a support if this one gives here at the dotted trend line, which will start to be a super support earlier on in the week if you want to call it that. But our next one, 146.59, anything lower is our clear resistance here, which then turned to support on this day here. That's at 144.88. Anything lower is sort of this gap fill area in the chart. You can see from back here we do have a small gap that is on the chart still, and that does fill here to the high of this candle at 141.14. And last but not least, we have Amazon, which has just essentially done nothing. We did get the pullback off of this level that we talked about, the double top happening here and targeting our lower end of this sort of range that we're in. But it does look like we might want to break down a little further. We do have this doji hammer sort of happening here just under the 50 SMA and at this support at 1751. So maybe look out for a small bounce come early next week. Maybe we see a move back up to retest some, the high in here. Maybe that's at 1788. Sort of midway on the channel here, but if we break down further, we are targeting our level down here still at 1707. If that one gives, our next support below is at 1672. On any sort of miraculous move to the upside, just look at all this resistance we have overhead. Can never seem to clear anything, although we are putting in higher highs technically and starting to form a bullish channel. If you look at some of these lows, they are getting higher. Low, higher low, higher lows, higher low, still forming. So we really need to see a bounce here if we want to maintain this sort of very, very slowly ascending bullish channel. So keep that in mind on the longer time frames. But right now I would say, based on this little thing, this little doji here, maybe a small bounce early next week and then a further move to the downside, which would essentially break down below the support trend line of the bullish channel, which will look something like this. Let me just draw it in here to help you guys visualize it. So we have a support and then we have a resistance that's doing something like that. This bullish channel, it does look like, we could potentially break down out of that if we see a move to the downside next week. That's going to wrap up this week's episode of the Weekly Watch List. If you enjoyed the video, leave it a thumbs up. I genuinely would appreciate that. Let me know down below if you have any questions or comments. And as always, if you're interested in the Swing Trade newsletter, that's the first link in the description. We're on Instagram at tradebrigade.co. And if you want to chat with me and other traders real time, head on into the Discord channel. We'll see you there.